Hey guys, welcome back. You're still tuned into trading. The mid-cap indexes where we're seeing a lot of the pain come through. It's a near 700-point cut, over 2% gone on the mid-cap index. So that is really the part which is struggling. It is also the banks which have come under pressure. But you know, the one sole spot of green in this market has to be from the pharma pack. In fact, pretty much maybe like 2 or 3 of the top 5 of top only names which are in the green right now are from the pharma pack. So if you take a look at something like a Sun Pharma, for the week, it's seen a gain of almost 8%. This at a time when, you know, the Nifty is seen cut of 2%. The Nifty Pharma Index, overall also has done quite well. It's around 3% higher for the week. So this entire space is definitely standing out, but the rest of the market seems severely under pressure. But let's talk about commodities now. We'll be back to equities in a bit. For that, we have Manisha joining us, and today she's looking at the natural gas prices. Hi, Manisha.
Well, that's one cheer that the Western world is looking at, the weaker natural gas prices there. We did see all-time highs into last year there, and prices have kept on the higher side as well. But from nearly $10 of a high, we are trading at around 5.2 right now. And for the Indian markets, we've seen a high of 720 this year. So 420 on your screens right now. So quite a bit of a profit taking. For the U.S. natural gas prices, we are trading at a 9-month lows. The U.S. inventories have seen a decline, but a decline of 87 billion cubic feet is much lower than the expectation of 93 billion cubic feet, and this is much lower than the 5-year average of around 124 billion cubic feet. That is what has led to a decline in prices. Apart from that, natural gas is used to produce electricity and for heating of houses and establishments as well. But what the phenomena is working right now is that the wind power, which is quite good, has reduced the gas usage for electricity production, and that's weighing on prices. The free plant in Texas also is going to resume its operations. Remember, that got shut in the month of June, and that resumes operations in next week. That also has brought the premium down. And much of the European prices have continued to decline as well. The Europe gas prices now are trading at a 6-month lows. And if you look at the stocks or the inventories within European Union, they are quite on the higher side. Germany's storage is at 87% of its capacity, and the overall European Union average capacity is at 83% of it totally. So there is enough stocks, enough inventories, and there is mild weather forecast for much of January, barring the storm that the marketers are expecting in UK, US, Canada, etc. from Saturday to Monday. Rest of January really is expected to see milder weather, and that's what's weighing onto the markets, where we have seen prices decline anywhere between 20 to 40% for various gas varieties. And for the year as well, it's down anywhere between 30 to 35% for 2022.
Okay, thanks a lot for that, Manisha. So that is on the commodity space, but don't lose sight of the market because there's no recovery at all up until now. In fact, if anything, it's getting worse for the Nifty.